The number one cause of business failure in America, whether it's big or small, is the fact that businesses simply run out of cash. Businesses simply run out of physical, hard paper cash to pay their bills, to pay their suppliers, and to pay their employees. Now, what's even more shocking, believe it or not, is the fact that the majority of these businesses actually appeared profitable on paper. One of the largest misconceptions when it comes to finance in general is the belief that being profitable means you generate cash. Let me clarify this for you, because there are a large number of people, even Wall Street analysts, who believe that just because a company is profitable means it generates cash. Profit does not equal cash. The profit that you see on the income statement does not equal the cash in your bank that you see on the balance sheet. Whether you run a small business or a Fortune 500 company, it is fundamentally critical that you understand the difference between profit and cash and the timing that affects it. Because if you don't, your business will fail. My name is Nelson Alvarez. I'm a CPA and the founder of the C-Suite University. Here in the C-Suite, my mission is simple: to put you in the C-Suite. And I do that by providing you real-world, actionable insights that will help prepare you for the corporate executive level. Let's keep this discussion going. Now, if profit is not cash, well, what is it then? Profit is a promise, okay? It's a concept. It's not real. The profit number is not cash in the bank yet, but it will be once customers send us their checks for the services we provided them in about 1 to 2 months, okay? That's why we say it's a promise. Now, why do we say it's a promise? Why do we choose that word in particular? For most companies, when they record a sale, it typically takes between 30 to 60 days to actually get the money from the customer, okay? To get the check from them. Some customers will pay at the 30-day mark, some customers will pay at the 60-day mark, and some will pay in between, and then there are those that will never pay. Cash money doesn't come in all at once from your customers, okay? Now that's the real trouble, as I'll explain in a second. The primary difference between profit and cash is quite literally timing. And as they say, timing is everything. Okay, we talked about the sales side, where the customers send in checks to you. Let's talk about the cost side now, okay? And that involves your suppliers and your employees. Okay, as we talked, customers can send you their checks between 30 and 60 days. However, from your perspective, you owe your suppliers what they're due between 30 and 45 days, okay? And those are hard days. Now, I say that suppliers and employees demand payment every 30 to 45 days because if you don't pay them, you're actually going to lose business, okay? You're going to lose employees. Suppliers are going to stop doing business with you because you're not timely with your payments, and your business will simply destabilize, okay? You'll actually go out of business based on pure mismanagement alone. And that's the game here, unfortunately. Customers don't have to pay you on time, but you have to pay your suppliers and employees on time. This imbalance, this profit to cash imbalance, is what business owners don't fully understand and acknowledge until it becomes too late. On paper, business owners may see the company running a profit on the income statement. However, due to the timing of cash flows and the fact that they have to pay out their suppliers before their customer checks start coming in, before they know it, the business is drained of cash, and now the business can't fulfill customer orders, okay? This happens all the time, and it's really a shame. And this is why it's so important that business owners really understand the profit to cash imbalance. You can be profitable, but not generate any cash. And vice versa, you can generate cash, but not be profitable at all. It's a very complex relationship, which I explain in other videos, but just for the sake of this simple video understanding, know that you have to truly understand the profit to cash imbalance, and I'll explain a bit more in a second. All right, let me give a real-life example of how this happens every single day across America. I am a small business that sells commercial air conditioners. I sold a customer a commercial air conditioner for $10,000 on September 1st. My employees constructed and delivered the air conditioner by the end of the week on September 7th for a cost of $8,000. So, on my books on September 7th, I have my recorded revenue of $10,000, my cost of $8,000, and a profit of $2,000, okay, on September 7th. Now, in case you weren't listening at the beginning, I don't get that money all at once, okay? The customer has to send me that $10,000 check. When's it coming though? Well, given that I'm a small business and dealing with a commercial customer, I gave them 45 days to actually pay me. So that means I will not get the check until October 22nd at the latest, and I hope they pay. So they may never pay. But we're gonna say for this instance that they pay you on October 22nd, 45 days from the sale. Now, end of the month, September 30th rolls around, my employees need to be paid, and my supplier who supplied the parts for the air conditioner, they need to be paid as well. Let's say on September 30th, I had $9,000 in my bank account. Well, the whole construction cost of the air conditioner cost $8 grand, so I paid my employees and I paid my suppliers, okay? Now, on September 30th, I only have $1,000 in cash left in the bank, and I won't be getting that $10,000 check for another 3 weeks. Now, this is where problems start occurring. This is where businesses really shoot themselves in the foot and they start running into cash pinches. It's now October 1st. What is due on October 1st that we have to pay in cash? Rent, electric bill, taxes. Remember, I only have $1,000 in my bank for this example, and I'm not getting paid for another 3 weeks, and I have no more customer orders. How am I going to pay all these bills, which total more than $1,000, okay? This is the question that gets asked every single day across America, and business owners don't realize until it's too late. Oh my Lord, we have no money. We can't pay our bills. This is why it's so important from the get-go that business owners understand the profit to cash conversion cycle so that they can plan to cover those gaps when they don't have enough cash to meet their suppliers or pay their rent. While this is just a simple example, imagine if you're a larger company that has 20, 30, 40, even 50 times the amount of transactions like this happening on a daily basis. It becomes very difficult to track where that cash crunch is going to occur. So, what's the fix for preventing this? I'm sure you all want to know, how can I make sure this doesn't happen to me personally? You need to create a cash flow projection file. You can hire a consultant to do this, a one-time consultant to help you set it up, and then you can do it yourself, or you can hire an accountant. Essentially taking estimates based on your current sales volume and how you think it's going to grow, and you project it out over 3 years, okay? The consultant's going to set this up, and they will be able to identify, based on your current rate of transactions, where you will enter a cash crunch and a cash pinch, and how you can prepare and defend against that. Here's where it becomes fun and where I say it becomes super interesting, okay? Based on that cash flow projection, you can actually see in what particular month, in what particular year, you're gonna be tight on cash, okay? So what you can do is be very strategic. You can take out a line of credit, or you can apply for a line of credit, and you can go to the bank and say, hey, on this date, based on our projections, we're going to need X amount of dollars to cover our bills, okay? Can you loan us money? This really helps the company save money on interest payments, and it doesn't saddle the company with a lot of debt. As we all know, a lot of companies just take on loans and loans and loans just to get money because they think they need it. However, by putting together a cash flow projection analysis, you're gonna see exactly when you need money, okay? You won't have to take out any more than you need. That's the beauty of it all, that this is a solvable problem. Okay, I hope this video was helpful. I hope it showed you why most businesses fail and the lessons you can learn to prevent that from happening to your own. Do not confuse profit with cash. Profit is great, but cash is necessary. Okay, again, in summary, get that consultant, get that accountant, put together that cash flow projection file so that you know exactly when, on what day even, you will run out of cash. You take out a loan to stop it against it for a short term, pay it back, balance sheet's clean, you don't pay too much in interest, okay? Okay, if you like the video, give a thumbs up and then hit subscribe, okay? Please comment if you want to see some other content. I love creating content for people because I want you to succeed, okay? That is the mission of the C-Suite University. We're going to help everybody else so that we all exceed to the corporate level. See you soon.